Good morning. Welcome to Stock Market Today. It's Friday, August 14th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the great content for this show and also give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities were mostly lower Thursday after the S&P 500 approached its all-time high for a second consecutive day. Growth and momentum held up better than the value and cyclical areas of the market. Energy, fins, and industrials underperformed. Comm services, consumer discretionary, and tech were your outperformers. Treasuries were weaker with the curve steepening following a disappointing 30-year bond auction. Dollar was weaker versus the euro and sterling, slightly stronger against the yen. Gold finished up 1.1%. WTI crude was down 1% to close out trading on a Thursday. And as we get to the desk this morning, futures are down about 40 basis points after Asian markets were mixed overnight. China gained over 1%, but South Korea and Hong Kong were lower on the day. European markets are under pressure with outsized weakness in the travel stocks following the UK's quarantine decision. Treasuries are firmer across the curve. The yields have seen a big backup this week. The dollar is stronger against the euro, but lagging on the yen. Gold is down 60 basis points and poised to snap a 9-week winning streak. And WTI crude is off about 1% to kick us off on a Friday morning. Let's dive into the structure of the S&P 500. I guess close but no cigar yet is what we could say. On Thursday, the SPY came to within 80 cents of an all-time high. Now, if we look at the index, you can see haven't quite hit it yet, but for all intents and purposes, we're there. Largely in line with the view that we've been laying out for everybody for the past few weeks and months. Now, if we think about support and resistance, not much has changed here. 3150 to 3250 is support. Resistance 3350 to 3400. So we're in the resistance zone. Overbought in the near term. So I like to use overbought and oversold within the context of the trend. What's the trend? Up. Where are we within that trend? Overbought. What does that mean? Maybe I'm less aggressive on my ideas, right? As opposed to oversold in the trend. You know, you get these dips back towards zero or below. What's the trend? Where are we within the trend? Right now, we're overbought within the context of an uptrend. Chaikin money flow is still strongly bullish. So the indicators largely confirming what we're seeing in price trends. I do think it's a matter of time before we reach new highs. Is today the day? I don't know. Futures lower this morning. So continue to stay the course with the market overbought. Again, maybe less aggressive with new ideas. Make sure your risk management process is well honed and in place. Let's look at our market in a minute. What are we writing about in the note today? Well, stocks move lower despite better than expected claims data. The initial jobless claims data yesterday came in under 1 million for the first time since March. So, still a disaster of a number, but, the shifts on the margin are what makes sense and what drive markets. Growth value consolidation continues, but that copper to gold ratio remains in a downtrend, largely driving our view that after that, this consolidation that plays out in growth over value, yeah, it's playing out, but we think it's going to resolve to the upside. All eyes are on the long bond with TLT under pressure, and as I said, futures do point to a lower open here today. Now, if we look at the indices from a power bar perspective, there's really nothing bad to say. The Dow loses 22 basis points yesterday, but 11-2 bulls to bears there. S&P 500 down 20 bips, 168 to 63 bulls to bears on that metric. The NASDAQ was actually higher on the day. Second day in a row of NASDAQ outperformance. All is right with the world. 37-5 bulls to bears there as small caps were down a like amount to the S&P, 715 to 249. So solidly bullish power bar ratios for the major averages. Now, bonds downticked by 1%. As I said, that 30-year auction was under pressure. Yields have backed up and the curve has been steepening. What does that mean for equity investors? Well, we want to pay attention to it because to the extent that the curve continues to steepen, financials, in particular the banks, have to start coming onto your radar screen. That's what that means for me. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets are mixed. Hit our stock of the day today, the one that I'm highlighting in my note to Chaikin Analytics clients. How about LabCorp? LH is the ticker symbol there. Closed at 190 spot 59 yesterday, up 1.32% for this bullish stock that's in a strong trend and a strong industry group. What I see here is a solid uptrend that's pulled back that gives you an entry opportunity. Why? This is how I frame this up. We're still outperforming, right? Bullish stock outperforming. Now oversold with the indicator beginning to turn higher while Chaikin money flow is bullish. I like that setup. Right? Rally, pull back, gives you a shot at it. I'm highlighting it in my note today. As I said, I think this is compelling. Stock also did trigger one of our buy signals today, our reversal buy signal. So that's kind of a wake-up call to sit up and take notice. But I like the setup here. I think it's compelling. And I think if you're looking for names, this one has to be on your radar screen. Do you have to buy your whole position now? No, I just told you that the market's overbought. You don't have to be aggressive. But I think this is a name where if you wanted to start a position, I think that's a good idea. That's how I'd be looking at it, and then monitoring it going forward. But LH is our stock of the day today. Sector tracker now, move into the major sectors over the last 5 days. Look who's still at the top of the list, the one we started talking about earlier this week, the industrials. Now, this shift, this rotation in the market amongst the sectors, we started calling out materials weeks ago. Now we're starting to highlight the industrials. I told you we had to sit up and start to take notice of financials if the curve continues to steepen. So monitor those yields closely. Just because if you're just an equity investor, sure, that's your focus, but you really do have to be paying attention to other markets. So monitor what's going on in the treasury market for a read on financials. Discretionary rounds out the top three. In the middle of the road, energy, materials, staples, and healthcare, all higher. Towards the bottom of the list, utilities are up over the past 5 days, but towards the bottom, tech, real estate, and comms are negative over the past 5 days. I am looking for tech to reassert. Our industry in focus today, and I can't even believe I'm going to start saying that there's signs of life in the energy complex. Now, the relative trend is still bad, but you sit up and take notice of the subtle shifts and see if they begin to play out. So, energy, equipment, and services, XES is the ticker symbol of the fund that tracks this group, has actually seen its power bar ratio turn bullish. 4 bulls to 3 bears there. It's still currently ranked number 17 of 21 subsectors. It's lagged the S&P 500 by 38.5% over the past 6 months. But again, as I said, we have to sit up and take notice to subtle shifts. And that's kind of how you find the materials as they're shifting and the industrials as they're shifting. Now, I'm not quite there wholesale on energy just yet, but I think you have to start to pay attention to some of the bullish and very bullish stocks like National Oil, Lovarco, still a laggard, Select Energy, WTTR, and Technip, FTI, bullish or very bullish ratings. And largely what I'll say is the group continues to underperform, but we want to sit up and take notice, especially when I see a name like Select Energy, WTTR. Now, it's a low price stock, 550 close yesterday. Does have a bullish rating, strong trend, and again, strong industry group as defined by that power bar ratio. But what's interesting to me is the relative strength turning here. Now, you have to squint to see it, but it's starting to turn. I think that if you're paying attention to names in the group, this is the type of setup that you're looking for. You're looking for these names that have seen diminishing relative weakness and are actually starting to outperform. Now, could it be a head fake like in June? Of course it can. Nobody knows, right? That's why you manage risk. But I want to sit up and take notice of a name like that. Let's hit what's trending now. Yesterday's S&P 500 gainers and shakers are movers and losers. PAYC, Paycom, nothing company specific there, up 5% on the day. Keys, KEYS, up 3.65% following an upgrade from Goldman Sachs. AES, a neutral stock, up 3%. No company specific driver there. Chipotle, CMG, I think you had kind of the growthier and momentum names starting to play out, right? So Paycom, Chipotle, Tyler fall into that group. Chipotle up nearly 3%. Tyler is a bearish stock that was up nearly 3%. on the day yesterday. No company-specific driver there. On the loser side of the board, Cisco earnings report, and in particular, their commentary on 4Q orders being down 10% year over year, sent that stock lower by 11%. Holly Frontier HFC is a bearish stock. Now, again, another energy name, 6.24% to the good. This is why I think if you're looking in the energy space, you have to be very selective. HPE down 5.25, nothing company specific there. Micron caught a downgrade at Deutsche Bank to take nearly 5% out of that stock. And IVZ caught a downgrade at Barclays, down 4.75% on the day. Let's dive in. Here it is. The great growth to value rotation. This is what it looks like on the chart. Right? The headlines scream growth to value rotation. Here's your rotation. A sideways consolidation after becoming extended to the upside. Now, remember in early July here, I started pointing out the extended nature of this relationship. I wrote it up in a note for our clients, right? You can see how overbought it became. And I said, don't chase it. And largely that's been the right call, right? So as we see this consolidation, not short it, just don't chase it. And that's largely played out and continues to play out. Now, I do think that this is going to resolve to the upside. Notice the RSI of the ratio has not broken a bullish regime. And notice that the Qs are holding above relative support against the S&P 500. So I think it's important to do the work. Right? I think it's easy to get caught up in what everybody's talking about, get caught up in what the headlines are. And, you know, if you read the headlines about this rotation, you would think that growth was falling out of bed relative to value. And it's just not the case. Now, are we still extended? Yes. Are we extended to the same degree that we were a month ago? No, but it's still extended to the upside. This relationship is about 16% above the 200-day moving average. So something to keep in mind. I do think it's going to resolve to the upside, especially in light of this chart here, right? This is one you all know. You've seen it. You love it. It's the copper to gold ratio, which, you know, you don't need CMT at the end of your name to see that this is a downtrend, all right? Counter trend rallies are commonplace. The most recent one stalling at the declining 200-day moving average and now heading lower once again. This is our proxy for growth. And remember the thesis that in a slowing growth world, you want to own what's growing, right? Hence, owning growth over value. And what you can actually see is the growth to value relationship here and the 63-day correlation. It's a rolling correlation. Now, is it perfectly correlated? No, nothing is. But what you'll notice is that over the past 5 years, this correlation chart spends more time above zero than below zero, right? So roughly speaking, you know, there's this correlation that plays out as it oscillates between the two. So right now, you're just kind of seeing the oscillations, right? Just wanted to show you that nothing is ever perfectly correlated, and sometimes you do see some breakdowns. Right. But at this, you know, you kind of can see that there's no perfect correlation here. And that's largely the case across the board. But the bigger picture trends are in place. Right. So as this has gone lower, this has roughly gone higher. So it's easy to get caught up in something like this, but you got to step away and look at the bigger picture trend. And if you took this to a lower time frame, you'd see that the correlation is really erratic. So I get a lot of questions about correlation. I wanted to feature it here. It's not so much that, hey, these are perfectly inversely correlated. No, it oscillates, but the big trend is what we want to get right. And largely that's been the case. And then the one we're all watching, I think this has to rally from here. This is the long-term bond, TLT. Breaking the 50-day moving average, still above a rising 200-day moving average, well above it. Now, what I'm interested here in is seeing a reversal without becoming oversold and seeing this 21-day linear regression slope reverse to the upside. That would be ideal. That would keep the near-term trend up and show us that momentum didn't have enough force to take us down. So that's what I'm watching closely there. That's going to wrap it up. Happy Friday, everyone. Take us for a test drive, ChaikinAnalytics.com/test drive. Have a great weekend.